Good morning, everybody. Welcome into the Everyday Growth Advisors live stream. Welcome back, guys. It's been a while since we had these streams, and I am so happy to be back on YouTube. Make sure you share this stream with your friends and family, or even your enemies. It is nice to finally be back and tune into some Type 9 music as usual. These pre-market streams are going to be back Monday, Wednesday, and Friday so that we can break the markets down with you. CPI news just came out right now, exactly 1 minute ago. Let's see here. Consumer prices 1.3%. Consensus was 1.3, 1.1. That was a little worse than expected. CPI ex food, energy 0.7%. And consumer prices increased 9.1% from the year earlier. That is wow. Okay, that's not good news. That's, of course, is definitely worse than expected news, or kind of in line to what the market was pricing in yesterday and the day before. Okay, a lot of this movement that we saw in the past 2 days has been a result of the CPI being priced in. And so this move that we're seeing right now that's happening, moving to the downside, is a result of majority of the CPI being priced in, especially the end of the day sell-off yesterday. There's a couple of things that we need to talk about today right before we get into the meat and bones of technical analysis for individual tickers. As usual, for all of you that are here new to the stream or returning members to the stream, as usual, put your tickers down that you want me to have a look at, and I'll get to them at the end of my analysis. So I'll help you guys break down those tickers and get it kind of sorted out towards the end here. The S&P 500 is likely to trap some bears on the way down here today, so be very careful. Okay, so let's talk about a couple of things here. First of all, as we just found out, CPI numbers were pretty much I would say in line to what we were expecting, because we knew CPI was going to be higher than expected. Now, first of all, what is CPI? CPI is the Consumer Price Index, and we follow this as a pretty much a benchmark for inflation, right? And so when we look at CPI reading, we're looking at a basket of things and how they've increased in terms of the price. So we have the news right here, and I'm seeing all the news stream in right now. So this is our Discord community, by the way, for those of you that don't know what it looks like on the inside. This is what it looks like. With the CPI numbers, we are looking at how these prices are increased year over year. Okay. And because we are in a Fed tightening cycle right now with monetary policy, these numbers become even more important right now in kind of deducing where the Fed is going to head with inflation. Okay. And what are they going to do to tackle it, in other words? So we have been looking at the Fed tighten monetary policy for the past couple of months now in this cycle. And we've been expecting inflation to be running hotter than usual. The Fed had its stance last year where they said it was transitory for a while. And now, they're changing their stance and saying that it might run hotter for a longer period of time. Now, this is obviously something that I have been mentioning. The bond market has been pricing in for a while. And you can see, as a result, the dollar has been surging. Even today, right now, it's surging, right? And we're getting into some very nasty breakout territories here. Obviously, this is a big region here for the dollar to find some resistance and possibly a pullback. But you can see this huge wave up on the dollar index, DXY. And this is not necessarily good for equities, right? Not necessarily good for stocks. Why? Because when the price of the dollar goes up, it lowers the buying power for all dollar-denominated debt and instruments, which is stocks and bonds and anything else that you want to buy. If you buy it in US dollars and then the price of the US dollar goes up, now you can buy fewer of those things. So as a result, you would see the equities would be priced downward and revised downward. And then not only that, as CPI heads higher, this also points to, what does it point to? It points to a more aggressive stance on monetary policy from the Fed. So which means they have to tighten even quicker now, based on what the new inflation is and what we are seeing in the markets right now. So a lot of things going on here, a lot of things to unpack. Now that's one thing. The other thing is we have earnings season upon us on Friday, right? We have earnings seasons upon us, and it's starting. And remember, with earnings season, what happens first? Usually financials report first. So financial companies or financial businesses. That's your whole XLF basket, right? Your JP Morgan, your Goldman Sachs, your Morgan Stanley, all of these, right? Big banks. We're talking about market makers, wholesalers. We're talking about all of those people that provide plumbing and liquidity to the system, right? And so far, what we have been seeing is a lot of pricing in of the market seeing that financials are going to underperform. But remember that however that financials perform will lead the way for, or it will basically set the tone for earnings season. Okay, this is a very important thing that you guys should probably know. When we look at the earnings season, we look at financials, and financials usually sets the tone for how earnings are going to be. Why? Because if you think about it, when we talk about earnings season, and we talk about how financials are the backbone of the economy, they are liquidity providers, right? So banks, what do? They lend money to businesses, right? And when they lend money to businesses, they are hoping for a return. And now if in this inflationary environment, businesses have slowed down, and let's say demand slows down, and let's say there's a supply choke somewhere, this means businesses slow down, and we are likely to see a couple of things happen, okay, simultaneously. Now, I'm not saying that, this is going to be doomsday and and we're going to go to, SPI is going to go to zero. That is not what I'm saying, okay? All I'm saying is these are the minute things that you have to keep at the back of your head when you're trading, right? And if you're investing too, right? Remember, our journey here is not just to help traders. Our journey here is to also educate investors and people who are also interested in personal finance, right? So I hope that these small insights are, somehow helpful to you guys. It's really nice to be back here to see you guys, and hi. Absolutely, different times that we're seeing here. And it's about to be interesting in the next week or two, definitely, getting into earnings season. Once we see financials, we see how they perform, we'll be able to kind of understand where we're headed to with this earnings season, and we'll go from there. Well, of course, we'll have live streams. We'll have a live stream on Friday as well, and then next on Monday again. So we're gonna be here covering everything through the steps with you guys, it will be great. Okay, so let's now get into the technicals. And once again, if you have tickers, let me put them in the comments so that you can pretty much get my breakdown later. Okay. Ever since what is this date? 29th March, right? We've been in a downtrend. Lots of nice series of waves cascading downward, right? And then we had a little relief rally somewhere in end of May, right? And then we had a huge sell-off after with the monetary policy, right? A shock somewhere over here. And ever since then, we've been trying to recover, but we've been kind of squeezing into this descending triangle or descending pattern. And right now, we're kind of ranging, right? But in an ascending fashion. We are in bear territory, so we shouldn't be changing our view on majority of things. We shouldn't be changing our view to bullish bias yet, because we remain bearish until the bias changes, or until we see data that supports otherwise, right? So with that, I like to always say, keep your bias clear and play pivot to pivot, right? Play pivot to pivot. Now, pretty simple today. If we break below the 3741, right, this region right here, you can see it's a pretty decent support level here at this region. Then we're likely to break down all the way down into 3640, right? We have been seeing a lot of unusual flow for SPY betting on 363. So let me go into SPY real quick so that you guys can be aware of where we are. So 374 is where we are. And we've been getting a lot of bets into the 363, which is the low prior. This is 363, pretty much, right? So institutions or smart money have been betting for downward waves, for 2 weeks now. We've been seeing a lot of that money flow in. into unusual options. Almost, I would say, I'm not even kidding, close to 120 to 150 million dollars in options being bought for downside hedging, positioning, whatever you want to call it. And remember that majority of these are long positions that require delta hedging. Therefore, institutions are more than ready to take on that kind of risk in the temporary interim. And that's just important for them to do in order to maintain that alpha generation, right? And then we also have on the flip side with gold just breaking down here, right? Because of the dollar. Remember that gold is denominated with dollar most of the time. So it's likely to go hit this 158, 157 before it starts bouncing. And, you know, it's about to be a 90-degree kind of parabolic drop here, where we see the support here with gold. So there, of course, if gold breaks here, actually, it might be a good trade to take this to the downside. However, the risk to reward ratio is pretty terrible, considering if you were to look for a bounce here instead when this wave is over. So if it breaks aggressively here with big volume, then yes, the downside is possible. But if we bounce here and, you know, start breaking with low volume, I would highly recommend you not chasing this trade to the downside. Wait for the bounce in the demand zone. There is a very strong demand zone here. And then if it bounces, you can always play the next leg down or play the bounce on the lower levels. What you don't want to do here is speculate that it's going to break further and then get yourself into a pickle. Okay. Cool. Welcome back, guys. Really nice to see you guys. Hey, what's up? I mean, Salim, welcome in. Who else is here? I'm actually curious to know who's here for our debut return stream. Okay, let's get into some charts. Any tickers that you guys want me to break down? Post it on the chat, and then I'll have a look at them. Yesterday we traded Apple to the upside. That was nice. We had some pretty decent trades. We've been playing some interesting trades. We also traded Enphase Energy yesterday after the filled breakout here in this region. We mentioned 205 level was supposed to hold. Sorry, 215 level was supposed to hold, but it didn't hold. We played this big wave down yesterday, and now it's down 183 again. Hey, yo, what's up, Mark? And then, okay, so let's get into some tickers that I'm watching for today. I'm watching Zoom here. And I already have a Zoom bearish position, just so you guys know. I picked it up yesterday. And I closed out majority of my bullish positions yesterday. So we have Zoom puts. I called it out in the Discord. I'm pretty sure I did. Let me see. Yeah, I called it on the live trading session. I'm pretty sure I did. And Zoom is nicely down pre-market here. So we're expecting a continuation. This is a, let's see, it's going to gap down at around 104. This is likely to be a breakaway gap and likely to head down into the 23.6 at $100 or so. So that should be a nice little trade that's going to energize our gains for this week. And then Tesla, yesterday I took a bullish position, but I closed it out after it rallied here. Let's see. Yes, I closed it out yesterday. Right before I went to bed after it rallied here. I took it somewhere here. And then it rallied here and I closed it out here. And then it moved sideways. And then today it's opened at 676. Tesla with a very interesting kind of movement here as well. Likely to go down to retest 650 in the short run if it continues with this bearish momentum. That's another one I'm looking to trade. The upside here is no longer valid. So we'll be leaving that as that. And then we had Costco as a trade as well. We were looking at this. This is all part of the snipe list, by the way, for this week. And then we had McDonald's and XOP, and we still have a bearish position on XOP. This is another trade that we've been looking at. We are still bearish oil and gas exploration, mainly because of a lot of the macro-driven news here with oil and gas. Some other tickers that we're watching, there was Triple M posted yesterday, but I think this one kind of got clapped in the end. We'll be looking for this kind of a market is great for. Let's see, what is moving here pre-market, and let me just pull it out. Now, in order to see what's moving pre-market, I usually look at FinViz, just so you guys know. So you can see, well, pre-market here, everything's kind of, big tech is really red, right? Tesla, Amazon, Google, Meta, Apple, Microsoft. This is your financials here. Basic materials, everything's kind of red here. The only couple of green, Twitter is up 1.5% for some reason, Dollar General, whatever this is. Some of these random stocks are up like a couple dollars here and there. Not really anything interesting. We'll see how this pivots intraday. Today is a day where you have to be risk averse because we could easily be trapped in this downward wave here, and you don't want that. Okay, you do not want that. So because all of this is happening pre-market, when the market opens, there's going to be a lot of rushing to either open bearish positions or cover bearish positions, and that might cause a short-term whipsaw effect back up, and that's likely to cause some kind of a relief here. And then we'll likely see the resumption of the downtrend. So be very careful, as usual. Okay, let's look at some tickers. NEO. Okay, NEO. Let's see. NEO. I think we've been watching NEO for a while. NEO. Let me see. Let's delete this away. Delete that away. Delete this away. I like to start fresh on my charts. This is a key level here. Oh, still holding kind of strong actually with this trend. Well, if it comes down back to, let's see here. It needs to kind of come down back to around 1958, right? I would say. This level right here. Now, let's just say $19.30. 1930. It kind of needs to push down here a little bit more, and then if it accumulates some demand here, that will be a next wave up over here with NEO. Definitely looks interesting. If you go by this wave here, there's a lot of upside to be taken, but we have to see where this bounce happens. So right now doesn't look like a good scenario for the upside just yet. We need to see that bounce, and I think that bounce is going to happen in this region right here, around the 1930 to 2030 region, roughly somewhere there. So you have about a $1 kind of a target range to buy or accumulate. And then the upside probably happens after that. So that's your NEO breakdown. I hope that's helpful. Play it either way though. So if you have a break below 1931, right? And then it comes back up to retest and rejects 1931, then you play the downside on NEO, right? That's also going to be the break of the trend, right? Of this higher high pattern. So then you'll start seeing the lower highs. And that won't be good, right? So you play it either way. If you get a bounce at 1931, you get a strong buy up here, and then it comes back down, you kind of bounce, then you have the upside here. Lots of upside. I wouldn't rush into this. Let it play out. Be patient with it. That's my recommendation. Patience is a very important part about trading, so you got to be extremely patient. Twitter, this chart is a mess, okay? It's a mess. Personally, I don't like the price action here. And I don't even want to touch it right now. Just so much of things surrounding, it was kind of like a buy the rumor, sell the news kind of event with Twitter. And when these kinds of things happen, I try to stay away from stocks like that. Why? Because, it just doesn't make sense in terms of the price action. And so I try to stay away from stocks like that. But if you want to absolutely do some TA on this, then try and figure out where the demand zone is, first of all. This seems to be, let's see here. I would say this is a decent demand zone. Below this was some unusual price action, especially this drop right here. Well, this is 2020 drop, so we're not even going to count that into the data, right? But this looks interesting. I like to throw goalballs at you. Well, this would be the demand, right, for Twitter. Okay, so that's your first step. Figure out where demand comes in. So this is a demand zone. It's hitting a demand zone right now, right? And then the next thing I would do is go figure out where the supply zone is. And that has been pretty much a lot of places, right? This is a big one here. There's a big supply zone up here. There's also smaller ones down here. Those look more like dual zones. But this is a big supply zone up here, so you can look at that. This is where supply comes in, demand comes in here. You have a couple of dual zones in this area. I wouldn't trade between this two places. It's very choppy. And then also don't forget to look at the volume profile of this thing. Yeah, so look at that. That's a huge volume node right there, right? This is a very defined support. So if we lose this level here on Twitter, then we go straight down to 20 or 16 bucks. This is where the next volume node is going to be. Now, for those of you that don't know what I'm talking about, these are all liquidity analysis tools that you can use. We teach this in our classes, which we're not enrolling right now, but we will be in about 1 to 2 months from now. Big announcements are coming in the future, guys, just so you know. I'll give you more info when I can, but as of right now, lots of secret things going on. Can't share them just yet. Okie dokie. Trading between these two, pretty tough. Wait for the bounce, and then you want to see it form higher highs here, so I would go into the 15-minute and see what's the previous high here. See, this is why it's so messy, right? It's super messy here. And this looks like a decent spot here, but still not really. I would go even higher. So in order to get bullish on Twitter, you need a break above 36.70 and then a bounce on 36.70 and then higher highs from here. Yeah, it's very, very messy. I wouldn't touch this just yet. Let the trend form, let the accumulation happen in the stock. I think it's going to trade sideways for a while after people speculate. So that's my recommendation with this one. Just stay out of it for now. Okay, next one, plug. Okay. Another one. Let's take out all of this. Don't ever be shy about removing your drawings from your chart, guys. Remove your drawings from time to time. Start the chart fresh and see where it takes you. Plug is turning bearish now. So, look at this was a previous demand zone, right? This was a previous demand zone here. Demand. And now, look what's happening. It's using that as a supply zone. It's using it as a supply zone. Now instead of finding demand here, right? And even here, it's now rejecting these levels. And this is what we call a bear flag, right? This is what we call a bear flag, okay? So moving down into the 1 hour here, a break below this would be bearish. Let's see here. Kind of want to make this a little thicker. There we go. So it looks bullish, but it's not yet. The only way this will get bullish is a firm break above 1970. This is the high, right? It needs to break out here, use this as a support, and continue higher. And then you got to play this pivot by pivot. You cannot risk having exposure to the upside here just like that. There's a lot of price action here that's going to disturb your momentum. So it's not really going to be able to run that hard. Like, look at this, right? Look at this. So you have big volume node here. You have a big volume node here. In between, a lot of this is just vacuum. A lot of this is just vacuum. There's really not much price action here for it to move through and fro. Definitely want to look at the $23 level only if you break above 1970. Firmly hold above it. Demand is definitely there. You hold, then you can take that upside. Other than that, look for the downside positioning. And the downside positioning is going to be below. I don't really like this setup, by the way. Below, I would say $15. Let's just say 15 something, right? 15-ish. Below this level. And that's likely to come down and then break and then retest. You will not be taking this on the break. So playing this to the downside here is no good, right? Look at where your entry would be. Your downside is here, and your risk is here. This is a 1:1 risk to reward ratio. This is terrible right now, right? Terrible setup. What you want is the break, and then you get your retest. So break down, retest, and then take the downside. And that will be based on the previous Fibonacci extension. If you know how to draw it, then go ahead and draw that. Okay. Helpful so far? Have you guys missed the stream? Next one, Roku. Ay, this one's another one. Sideways action galore. Roku is firmly in what we call the accumulation phase. And you don't trade something in the accumulation phase. My recommendation is not to touch this until it starts breaking out and getting momentum. Stay out of this stock for now. It can just move sideways for a long time. Unless you're looking at a long-term investment here to buy shares, this is a good spot to pick it up. But if you're looking to trade it, terrible spot, right? Look at the sideways action. It's just going to burn your theta on your options contracts. And the movement is like what? Is it even 10%? No, not even 10%. 100 to 84. That's like $14. It could be 10% here and there, but it's not worth it to trade this up and down like this. Skip Roku completely. This is a terrible setup, right? There's so many other setups, guys. Don't look at these Momo names. They're no longer a Momo. Remember that. Okay. Okay. Any more? If not, I'm gonna end the live stream here. We have I'll have another interim stream session with the live members of the Discord, and then we'll be going through the pre-market there, and then we're going to be trading together on the trading floor on the Discord community. If you're looking to join the Discord community, the link is below in the description, and there's a lot of announcements that are going to be coming up in the next couple of months, and so we are definitely excited to be back here on YouTube. Tune in every Monday, Wednesday, Friday. I really appreciate you guys, and if you can, smash the like button, guys. That is seriously very important to me, and I appreciate each and every one of you guys doing that, because you know you're allowing me to reach as many people as I possibly can. So yeah, Greato. What are Momo stocks these days? Oh, and okay, so I'm gonna just leave it like 2 minutes more. Ask any questions you want. Is there any questions you want my opinions on, or whatever that it is? Open mic, go ahead, ask questions. I'll be here for a couple minutes more, and then I'm gonna get the live session off so that we can concentrate on trading for today. This week has been, so far, not a bad week actually. Let's see. We'll take profits on XOP and Zoom. Zoom is gonna pay out nicely. Oh, and I closed this out yesterday already. This was closed out at 217. Oops. There we go. What are Momo stocks these days? Semiconductors are considered momentum these days. And then you have China stocks. They're super Momo. They're very, very good in momentum. Your cybersecurity stocks are Momo. I'm talking about D-Dog, you know, CrowdStrike, right? Yeah, those. What else? Yeah, those are mainly the Momo stocks. Everything else kind of like, eh. All right. Well, thanks for tuning in. For those of you that didn't make it in time, don't worry. We'll be holding another one on Friday. Come prepared. Bring your tickers. If you have tickers for me to break down, and we'll do them. I hope you enjoyed this stream. I'm going to cut it here. We'll see you on the live trading session, those of you that are on Discord. And yeah, let's kick it. So have a good trading day, guys, and we'll see you on Friday. Take care. Peace.